Maybe we don't speak enough about how important it is creating and maintaining a personal budget. Maybe we don't realize how important it is to attaining the future that we want and achieving financial stability. Creating a personal budget is key. And in this video, we're going to break it down and talk about some key things and components you need to know and understand about creating a personal budget. You need to determine all of where your money comes from. Your income is all of the money that comes into you as an inflow. It is essential to know exactly how much and where all of that money comes from. I would say if you have different income streams, it's important to be realistic about the money that comes into your account. You might have a 9-to-5 job where you have a constant known salary every month. You might have a side hustle where there might be variable incomes at different points in time. You might have return on investments or investment streams of income coming in. You need to know exactly how much and where all of the money is coming from and how long possibly that money is going to be coming in for. So you need to be very exact. And I said, be very realistic about it. Also be moderate. So for example, if your side hustle generates between 1,000 and 1,200 different points in time, so it varies. What comes in this month might be slightly different from what comes in next month. I would say take an average of, over a period of time of how much comes in from that income stream. As much as possible, take the lower part of the income that comes in. It's better to underestimate than to overestimate what your income actually is. Now let's look at this example or this breakdown. So you have a 9-to-5 job. You probably have income coming from, Amazon or an Airbnb business that you do. You probably have income coming from investments. And this is the total amount of what you receive every month from all of your income. So we know exactly where the income is coming from. We know what the total amount is. And essentially now we've done one important step. We know how much we make. So the goal now is to move on to the next bit of what we need to do. And that is tracking all of our expenses. So your income is all the money that comes in, the inflow, while your expenses are essentially all the money that goes out, which is an outflow. Your expenses could cover your bills, discretionary expenses, and some other things that you might need to cover. But that's all of the money that you have to pay for something that you have to cover an expense, and that money goes out. And essentially what you want to do is to make sure that you know every single part of where that money is going to. Might sound difficult. If you haven't created a budget before and you're thinking to yourself, you know what, I need to start tracking where all my money is going. I would say start from, the things that are like your habits, start from things that are subscriptions, start from expenses that regularly occur. That way you know where that money is going, first of all. And then you can walk yourself back to what did I spend my money on last week or yesterday even. What did I spend my money last week? What did I spend my money on 2 weeks ago? You can go back to your bank account and see your expenses. I mean, a lot of people pay, by tapping their phones or with their credit cards or with their cards. You can go back and see your bank statement to see what you'll be shocked. Many of the people I've worked with and we've had to look at the bank statement, is shocking sometimes when they see certain payments and they're surprised as to why they've spent certain amount of money on certain things. Sometimes, at the moment it feels like, what, that's all right, I can afford it, or it makes sense to me. But 1 week down the line, 1 month down the line, you realize it's such a terrible expense. So having to track all of that expense or all the expenses you've made can be very helpful. You can categorize all of your expenses and then break each of them down. But we just, put all of them here together. For example, you have your rentals or your mortgage. You have, having to pay for, buy groceries, having to pay for your utilities, mobile, TV, and some subscriptions. Now, all of these can take on different levels of priorities in your expense sheet. So by understanding where all of your money is going, you're able to trim the fat. You're able to say to yourself, well, I don't need two subscriptions on TV, on Netflix or Prime. I probably don't need to pay for that cloud storage space. It's probably a trial subscription that needs to be cancelled. You probably haven't had time to cancel it, and it's 2 months now. You have been deducted 2 months for an app or a software or a platform or website that you've never used, but you put in a trial subscription, never got the time to cancel, never got the chance to claim back the money or claim for refunds, but it's still there on your account. I remember having a trial subscription on my account. I had clicked something on Amazon Prime. So I have an Amazon Prime subscription, and within Amazon, there are other small subscriptions to get in freebie. I can't remember the names right now, but there are other subscriptions you can make within Amazon Prime while you're watching the movies. I mistakenly clicked, it had automatically deducted the initial payment. I never got on to using that or watching movies on those small parts within the Prime, and essentially that happened for 3 months. And while I was looking at my bank statement, I was like, no, I don't even remember subscribing for that. But looking back and trying to track your expenses can be and can essentially make the difference with you understanding what is my priority cost, what is it that I cannot do without each month that is necessary to function, and what is it that is not. Some discretionary expenses, maybe I need to cut down on some of them. But by tracking your expenses, you're able to understand all of where your money is going to, you're able to understand how you can work around it. And what you're trying to do is to make sure at every point in time, your income is way above your expenses. And that takes us on to the next point, understanding your net income. The next thing you want to do is to subtract your expenses from your income. Your net income is the extra money, the net that is left after you've taken away all of the expenses that you have, and what is left is your net income. So you have your income minus your expenses, and that gives you your net income. You want to make sure at every point in time that your net income is positive. Now, if you look at the example, we talked about our income, we talked about our expenses, and the tables show us what our income and expenses are. And if you take away our expenses from our income, what we currently have here is our net income. And in this case, it's positive, which is good, but it's almost 80% of our expenses, almost 80% of our income. And that's something we need and want to work on. But if you have a negative net income, that's also fine. What it tells you and what it points to you is that you need to essentially do some work. You need to get active. You need to find new sources of income. You need to find how to cut down on your expenses. You need to reduce all of your costs. You can start by easy ways, canceling your certain subscriptions that are not necessary. You can start by renegotiating certain utility bills to see how you can get lower tariffs. You can try to reduce your expenses on discretionary items, where you have to, going out on dinners or thinking about that movie ticket or, going out on a date. We're not saying you should entirely cancel all of these things. It's actually good to maintain your, mental health, but there might be ways that you can have cheaper dates. There could be ways you can have more affordable dates, at least for the period where you are currently struggling financially until you feel you're financially stable, and then you can begin to increase some of those expenses in some of those other areas that comes with luxury and relaxations. And of course, things around habits need to be taken into account. What are the frequent things, whether it's, buying drinks, whether it's, treating yourself to loads of chocolate and ice cream. some of these habits that you like might need to be reviewed, and probably cut down on some of those. And instead of eating out, you can start cooking in the house. These are some ways you can try to cut down on the cost here and there, which might be exceptionally helpful to increasing your net income at the end of the day and reducing the expenses in relation to your income. So if you've gotten to this point, I want to believe that you might have started scribbling down your income and your expenses. If you have, that's a great thing. If you haven't, you can pause the video and just try to mentally take account of all of your income, take account of all of your expenses. If you have only one income stream, you should, a bit worried. And some people earn quite a lot from salaries or from one of their income sources, but it might be worth diversifying where your income comes from. It's always key to diversify. It gives you a better range in terms of financial stability. But you might just want to start taking down notes as to where all your income is coming, where all your expenses are going, or where all your money is going to, and then see what currently your net income is. When you've done this, and congratulations to you if you've started doing it, when you've done this, you move on to deciding where the income goes. So you need to allocate your income to specific areas. And what you want to do is start with things that are priorities. All of your income that you get, you're saying, if you have priority items like paying rent, buying groceries, utilities, if you have all of these priority items that have to be paid essentially before any other thing can happen, you need to allocate those. You need to allocate your money to those priority items to say these are things that need to be paid for. Priority items, categorize them and allocate resources to them. Of course, I would always say, and you would always hear this as a golden rule, ensure that you have savings. Ensure that money goes into savings. Ensure that your savings is paid first. Now, what I say is you have your priority items and then you have your savings. You can automate those payments, meaning that every month you know that 20% goes into priority, paying priority items on your expense sheet, 20 or 30% goes into savings and investment. But you need to decide that at every point in time, your income has been allocated to priority items, savings, and investment. If you're heading towards financial stability, part of that journey requires that you have to find ways of compounding your income. So beyond the income you receive that comes in, standard, you have to have various income streams, investments. You have to have ways of trying to compound the income that comes to you. These are essentially the difference between where you might currently be at and where you're trying to head to in the future. And finally, might sound like the easiest bit, might sound very obvious, but you need to stick to your budget. You need to create a budget that you can stick to. But of course, it's all right if things change. If your life changes, if income changes, if expenses changes, then you can of course change your budget. But you need to ensure that you're creating a budget where you can maintain what you've said you're going to do, where your income is coming from. You can work hard to maintain that income. You can work hard to maintain the expenses and probably reduce your expenses as you keep going on and trying to identify things that are clearly not the priority, even though you might have thought they're priorities. So ensure that you're going over this budget, you're frequently revising the budget, editing, taking things away, adding things where necessary. But know that the same way life changes is the same way your budget can also change. So make sure you're reflecting your budget with your current condition in life, your current lifestyle, and trying to maintain that budget when you create them. Now, thank you for watching. Thank you for watching our videos. Thank you for subscribing. Please like and drop a comment if you enjoyed the video. If you have any comments, please put in the comment section below. And don't forget to continue to show up.